Hello, my YouTube friends. My name is Adam Kahn, and this is my Dividend Retirement. Welcome to my journey as I rotate from growth stocks to dividend stocks because I don't really want to pay such close attention as the markets move around that maybe I have to sell a few shares from time to time or whatever I need to do to manage things as I get older. I don't know about you guys, but at least for me, I just want to receive dividends in order to budget for my family and our life. And I think that'll make things a lot easier for my wife as well. Stick around. I'm going to talk about a new stock that I'm looking about and get your opinion on it as well. Should be a great video today. So I'll get right into it and let you know that the company that I'm looking at was Robert Half Inc. Um, Before I get into why I'm looking at it and what they are, as always, nothing in this video is financial advice. Please, you shouldn't be listening to me when making financial decisions. You really need to do your own research for making any investment decision and probably reach out to a professional financial advisor. I am not a professional financial advisor. I am just a guy on YouTube. I do this stuff for entertainment purposes only. It gives me an outlet to kind of yap about the things I'm thinking about, and it kind of like helps me get my thoughts in order. So, why am I looking at Robert Half, and have any of you even heard of it? So, Robert Half is actually a staffing agency, and the funny thing is, part of why I'm looking at it is it came up in one of the YouTubers' videos, who I think is a really good YouTuber, is one of the companies that's more than likely to have to cut their dividends sometime soon. Now, it was a company that I looked at not that long ago, but it kind of like it just popped in my head, like, and I got curious, so I looked at it. Now, I happen to agree with that YouTuber. It's using like 167%, and I'll double check because I had to do this inside today because it's friggin' freezing out here. But I'll double check. I think it's using like 167% of its free cash flow to pay its current dividend. But the current dividend is like 9.5%. Let me look while I got you guys right here. Forgive that this is kind of like playing out like when I do a live, but so let's take a look here. Dividend payment. Yeah, 9.5%. So it's a super high yield. So my attitude is even if they have to cut that, it's not a major deal. Even if they cut it in half, it still fits in that range of where I'd like to be as the overall portfolio. And God forbid they get things on track and they're able to continue making that payment. What a nice boost to the portfolio. I can put on a really small position because I'm uncomfortable with it. The thing that I am comfortable with is they have good earnings. They make good money. Unless they do something stupid where they put themselves in jeopardy, I don't see any reason why the company wouldn't sustain itself for a really long time. Maybe something happens with the dividend, but unless AI changes it and nobody's using them, and here's what's going on. As people are losing jobs and the job market is slowing, people are getting nervous about a company like Robert Half. But I have my own theory, and I'm guessing that the market is right. I always think the market's right. I think things do make sense. But I also think with a PE ratio of 18 and change, it's a lot lower than it typically is because I took a look at that. And I think in the long run, things will work out on that end. But my thought is if things slow down and people are unemployed for a decent amount of time, they really might start looking at staffing agencies to try to help them find a job, even if it's not working so well. Like maybe you lose your job, you figure I'll find something new, you start looking for it, and over time, as you're having difficulty, you're sending out your resumes and they're not getting responses. Maybe you reach out to a company like Robert Half to help with it, whether that has success or not. The other things that I really like is their balance sheet looks just fine. It looks like they've got enough money to sustain a really long time of slowdowns. And if I look at a 5 year chart, they're at a low over the past 5 years. They're even at a low, if I saw it correctly, over a 10-year chart. And like I said, the price to earnings ratio is super attractive at 18 and change. That's very low in terms of their history. So I'm really comfortable that the company is doing just fine, even if things are not as good as they were a year or two ago. And I think it's a cyclical business. Like I don't think AI is going to end all jobs. I think what ends up happening is we're innovative, we continue to grow, we continue to come up with things. Even if it slows things down and we go through a cycle where we have higher unemployment and the economy gets a little bit shaky, given time, I imagine that'll change. New jobs will be created. Like if you think back, one of the guys I work with said, go back 10 or 20 years ago, nobody ever thought there would be a job doing TikToks and things like that. And now you've added to like there's all sorts of techniques and ability and just you're gonna have a huge number of people gravitating towards other industries if it's not computers or whatever it is. So I do think in time a company that does staffing should do just fine. And what I love is God forbid they get through this. And I took a quick look while I hit the pause button, and they're using 135% of their free cash flow. Now, that is not sustainable forever. Obviously, if you're using more money to be able to pay the dividend than what's coming in, at some point something has to change to make things work out. Now, that's kind of why I looked at the balance sheet to see if they have an ability to sustain that for a long time, which they do. So my guess is they're not looking to cut the dividend anytime soon, or that would be something they would be discussing. So God forbid they're actually able to get through it in a position where they're able to continue to pay that dividend. I'm picking up a stock at a really cheap price that might get lucky and be able to continue to pay an exceptionally high dividend that I'm not counting on as I buy that stock. Let me know what you guys think. Is this a company you've looked at? Are you going to look at it? I mean, tell me in the comments. I mean, do you think that makes sense to you guys? Because my thought is, if I buy it with a really small percentage of what I typically would for the companies that I've been looking at, that what's the worst that happens? Like they're making money, they're doing just fine. I don't see any issues there. Their margins are getting squeezed. Maybe they have some new competition. It looks like they're only making about 3% on their profit margins, but they have close to a 40% margin on their what they're charging versus their, you know, not their net margins, but their margins. So I think they're in decent shape. And like I said, I love to see that the stock's gotten beaten down so bad. And I don't think it's anything that anybody really pays a ton of attention to. So I was glad that the guy mentioned it in his short that I was watching. Again, I find it interesting. I wasn't looking and I'm not going against his thoughts on it because I don't think he may be wrong. He might be right that they need to cut the dividend. So let me know your thoughts. Now, currently, these are the companies that I have that are getting dividends at this point, and I'm not going to go over the dollar amounts or anything like that, but this is just my list currently of what I already own. I did do what I said. I added on Prudential, and I actually bought the Hess Midstream and MPLA. I had purchased that in my trading account because I figure I'll rotate it in time into the other one. It's not a big deal for me to keep it in the one account and then just put it in this one as the growth stocks get taken on the calls that I've been selling. But I have Meta and Google on here because they actually do pay a dividend, but the dividend is so small that it's kind of negligible in some ways. But Chevron, Starbucks, Kenvue, which is going to end up being Kimberly Clark. But what I liked about, first of all, I bought Kenvue when the Tylenol scandal came out because my attitude on something like that is if you're holding a company for 5 years, uh, most of you may have even already forgot that there was some big Tylenol thing that they shouldn't be giving it out anymore. So I'm guessing people have already forgot, but I thought that was a good opportunity to pick up Kenvue because people are going to still buy Tylenol, and it caused the stock to plummet. And I was able to pick it up when that happened. Then they made the announcement that Kimberly Clark is buying them out. So just fortunate, lucky timing. Nothing that I actually foresaw. I just was already beginning in my head to think about the transition to dividends, and Kenvue looked like it paid a nice dividend. The nice thing is so does Kimberly Clark, so it fits right in line. The only thing I did is I added on to the Kenvue to make the right amount of shares, so it's an even number transition because they have this really funky amount of shares that they're going to give and how it works. The thing that I do like is if you have Kenvue, you're actually getting a premium based on the shares you get and the dividend that they're going to pay out, so long as it actually goes through, which I think it'll happen. Anyway, that's a whole long time on that. Another one in the account is NextEra Energy, a company I love. Doesn't pay quite as high a dividend as I would like to fit the portfolio, but I've owned them a really long time. I think they're a great company, and I just don't see any reason to make a change on it. And it still fits in that dividend motif. It just pays a little bit lower of a yield, but I think they're in a great space, and it's a good one to own if you want energy. Pfizer is one that I have in there that I have a nice position. Target, rah, Target, which I like to joke about. Bristol Myers, Clorox, which is one of the newer ones. Um, I also have obviously Conagra, Cisco, not the food company, which there's nothing wrong with the food company. Maybe I should look at them. They're a real leader in that space. But no, the technology company, the one that did phenomenal back in the .com thing, got crushed, and it just recently made new highs before having earnings recently, and then the stock fell off pretty good. But I think they're a great company. They're a little bit boring in some respects, but that fits my personality because I'm a little bit boring too. But it pays a nice little dividend. It tends to just chug along, and I think they do just fine. They're slowly growing and growing. I really like Cisco. I did trim the position to pick up things that were paying a higher yield, but I like the company a lot. It was more that it fell a long time ago, and I picked up extra shares because I liked the company, and I wasn't even paying attention over the years, and had gotten through my price of where I planned on getting out. And then I was just going to hold it, and was like, wait a second, you planned on getting out and putting the size back to where you wanted it. You want these other dividend stocks, so I did what I should have, sold some of it, moved it in the others. Whirlpool, Kraft Heinz, Microsoft, which even less than Meta and Google, like, it pays a dividend, but it's kind of silly. United Health, Procter and Gamble, Stanley Black and Decker, Prudential, which I know I've mentioned a few times, and T. Rowe Price, which I only put on about a quarter of what I planned to. But honestly, part of why I do this stuff, and I'm glad I did it, is when I started researching T. Rowe Price a little bit more. While I'm comfortable, because they're only using, I think it was, let me pull it up so that I don't misquote. Um, I think it was like around 50% of their free cash flow, and their PE is super low and everything else. So some things look really attractive. Whoops, it's not T-Raw, it's T-Row. But the funny thing is what I started reading, I really didn't like, and thought, geez, this is just not something I want to put too much into, because it's not like I see. Sorry, I have to look the little. Let me move it over this way. Um, it's not like I ever hear anything about T. Rowe Price. You know what I mean? Like, nobody ever talks about it. No, like, so in some ways it could be that perfect boring dividend stock. But then when I started paying attention, they've been slowly losing customer base for a long time. And I think that's probably accurate. And I'm not sure I really see that changing. And they're having difficulty with employees too, because ETFs are coming around and they have such a low cost to them. They're having trouble keeping their advisors because people are moving into ETFs and not hiring the advisors because of the money they save just buying into the ETFs. All made perfect sense, and what I worry about is that's a long-term trend. If they don't start getting their butt in gear and start doing some marketing and get their name out there, I don't think a lot of people even think about T. Rowe Price. I think they put their money into other places. Um, Let's see. So yeah, the payout ratio is 56% of their free cash flow, and their PE. Let's see if it puts it in on this page. Is a little over 10 times earnings. So both of those are super attractive to me. I hate to be so negative on it, but I'd only put in about 25%, which is typically what I start a position with, of what I plan to have on. And I decided I'm just not going to add on, that I'm okay with the position, because if it slowly deteriorates, it's fine. It's not a huge position. And I'll take the dividend in the meantime, and hopefully they get their butt in gear and start doing a little bit better in terms of growing the company instead of slowly losing customers. Now, I did decide to add it all up and get an idea of how much I currently have coming in. My goal is to get close to about $200,000 a year in dividends, which I think is something I can accomplish as long as I'm patient and it takes the next 3 to 5 years. The funny thing is, currently, because I've been fortunate with the growth stocks, I don't have a ton coming in with the dividends. Currently, when I added it all up, it's a little over 50,000 a year. It's like 13,000 a quarter. But I think it'll be a pretty easy transition to slowly sell out of some of the growth stuff and some things that have low dividends and start working on getting a little bit higher payments in companies that I'm comfortable with. Again, some of them I started buying some in the smaller trading account just because I don't want to lose the opportunity because I thought the price looked decent, the return was good on the current dividend payment. So I figure I'll just hold it there until I start moving out of the other stuff because I'm in no hurry. Like, we'll talk about Meta and what's currently going on with the court case. They're kind of challenging him from what I understand. And feel free to put in the comment section if I'm wrong. But basically, for teenage suicides, and I know some countries are starting to ban people going on social media under the age of 16, and maybe that's a good thing. So I don't mean any of the comments that I say the wrong way. I hope they're not offensive or anything else. But unfortunately, I think the problem is Facebook is not our parent. The parent has to be a little bit more involved, and they should be recognizing some of these signs. And I'm not trying to be judgmental. It is very tough. I have a 15-year-old myself. He's going to hide whatever he can from us. We're fortunate that he's a good kid and he's pretty upfront with us. And at least from what I can tell, we're not having any major issues with any of it. And look, we were the worst of the worst. I was so amazed. Like when he was a baby, we were giving him a phone, which shows you about how these generations are growing up versus how we did. I mean, it's funny for me to think about when I was in college, nobody had a cell phone. Like it didn't really exist. When I started working, people had them, but only the guys that were like really, they were pretty wealthy or whatever else. And people were beginning to get like the fancy one. Like originally it was just that Nokia, but then the StarTAC came around, and that was that first flip phone that was like dark, but then the Razor and all of these super old technology, and nothing until the Apple one came out. And I forget that wasn't that long ago. Like it feels like it was. I kind of feel like, geez, I always had a phone, but I didn't. And when I tell you, like, even before he could talk, before he could walk, he knew which app to go to. Like he would be playing with something, the phone would ring, we'd take the phone and we'd use it for whatever we needed, or we'd go do something and then he would just take his finger and go right back to where he wanted to go. And he wasn't able to talk, not able to walk, like none of it, but he still could use that phone and get to the thing that he wanted to watch. And we were so amazed with that we probably allowed him to use the technology more than we should have. So it's a kid who grew up with it. He isn't overly into social media or some of the other stuff, like I know some of the kids are. So I have really mixed feelings on all of it. And I know that the suicide rates have gone up tremendously, and it's a problem. And if you haven't watched The Social Network, it is a great program where a lot of the people who work at Facebook and Instagram and some of the other tech companies, like they don't let their kids on to this stuff. So maybe there's something to it. At the same time, I'm not sure that they can really hold Facebook accountable for people being addicted to it and suicide any different than McDonald's is going to hold. Is McDonald's accountable for the fact that people like the food and go there and eat unhealthy stuff? I don't know. And at what point is the government getting a little too involved and people aren't able to make their own choices? Very tough decisions, very big court case. I have a feeling that that is part of why Facebook is so discounted right now. Um, Anyway, a little bit off the topic, a little bit on, but I'm going to be rotating out of these stocks, moving into the others, and I'm glad that you guys are joining me for this journey. By all means, anytime you guys think about a company you like, you don't like, you want me to look at, especially if it's a dividend company, just put it in the comments. Like, I'm happy to explore and find some others because, like I said, I'm not a professional financial advisor, so the amount of stocks that I actually follow are pretty limited. And what I really hope to do is have about somewhere between 30 and 40 different tickers that are all receiving dividends to be able to get me to the amount that I'd like to. The other reason I'm doing this is, look, I don't think I'm that old, but I do worry about it, and the time flies by and we ignore these things for so long. And what I would like to do is have it set up in a way that my wife, God bless her soul, like, she doesn't find this stuff super interesting. If I can have an account set up that's automatically paying dividends, and I've explained to her that, most companies once a year when they go over it, they tend to raise the dividend a little bit. But if I can get it set up where it has them coming in, it's automatically going into our checking account already. God forbid something happens to me, it will be very easy for her to figure out a budget and just go forward with that. Now, hopefully, not too many of them end up cutting the dividends or things of that nature, but that's really part of the goal. Is I think it'll make things easier as I get older, and maybe, you know, the big bad thing eventually happens that we all worry about. Um, I like my wife, I like my son, I want to make sure they're well taken care of. And it's kind of weird that this gives me some joy to try to figure that out for them. And then even for us, it makes spending our life. And I'm trying to work less and less and travel more and more and hang out with them. So it all kind of fits in line. Anyway, like I said, put a comment in the comment section if there's something you're looking at. Tuesday, which I always try to mention, which we still got some time, 11 a.m. Billy, I know you're sleeping. The time sucks. And it probably sucks for a lot of people because it's the middle of the day. But Tuesday, 11 a.m. Pacific time, super selfish time, but it fits my schedule. I like to do a live show. I'm actually probably going to try to do it on this channel next week. We'll see. I haven't decided 100%, but if not, my other channel is Investing with Adam K, for those of you who know. Otherwise, we might just do it on this channel and stick with that. Those of you who think the sky is falling and everything else, relax. It always feels that way. And markets go up, they go down. It really isn't the end of the world. If they go down, if you're young, I was telling my son this, getting to the age that I'm at, I hope that we don't have a big correction anytime soon, because it's harder to come back because my life expectancy is shorter. I said, but you at 15, you should hope for a big crash, because if it comes around, it allows you to buy things cheaper. Like, eventually economies work themselves out. You can't have another boom off of a boom. You tend to have it off of a crash. And that's just kind of the cycle of markets. I don't expect a 2008 for the housing market. I don't expect an AI bubble to be quite like a dot-com bubble. I do think people are constantly nervous enough. I actually think this recent sell-off is a little bit overdone. So, but I guess we'll see. I mean, time only tells. Anyway, have a great Wednesday, right? I think I'm thrown off because we were closed on Monday. Yeah, today is Wednesday. Have a great Wednesday. I will try to post again tomorrow. I'm doing the best I can to keep up with it, but understand that my day is my day, and sometimes I still do work. So, like today, I went into the office, but I don't do that too often. So you just never know. Anyway, Robert Half, let me know what you guys think of the company, and we'll go from there. Have a great Wednesday, and I'll talk to you soon. Bye bye.